Right around the corner, the Federal Reserve has to decide if they are going to increase interest rates yet again. The information that's coming through needs to provide them with that ammunition in order to do so. But if it goes the other way, then the Federal Reserve can actually back off. This is going to affect you. This is going to affect your current employment. This is going to affect where you are going shopping and how much you're paying. All of this I'm going to talk about today. And then I want to look at something that's going on with China, positive developments. I'm looking at things that are happening geopolitically that are big changes from what we saw just a few months ago. Let's begin. My name is David Quintieri, and I have been looking into this information for well over a decade, taking the complicated and making it real simple. In this video, you want to look for a few things. First things first, we're going to talk about the jobs and the economy. Then we'll talk about the geopolitical aspects so that we can really understand as we connect all the dots what's happening. The US jobs report is set to provide some solace to the Fed. Labor market is continuing to show signs of cooling down. This article actually gets into it globally, but I thought it was important, number one, front and center, to talk about the jobs report because they always look at this and they say, hey, what's happening with employment? Well, you don't want to see things running way too hot because that's been the excuse all along. Oh, wages are too high. Oh, employment is so fantastic, so we can't do this. That's number one. It gets into some other things that people should be aware of, and you could see it for yourself. And, they're talking about the debt ceiling and all that. I think it's interesting just to look at other countries as well, because a lot of them are dealing with similar issues, okay? Slowdowns in many areas. You're seeing no price wage spiral. Australia wages growth is picking up in a tight jobs market. That sounds a lot familiar with the United States as well. Eurozone inflation numbers are far from the ECB's 2% goal. Same scenario, so many different places. Yeah, we want to get to this 2%, and they never can get there. Why? It's because interest rates are still not at a level where they can actually push them down. Plus all the other events that have been taking place, the geopolitical stuff, these things are going to have that impact. So we have inflation that's too hot in all these places. And so the central banks, whether it's the Federal Reserve, ECB, and so on, they have to do something about that. And that means increasing rates. As the news comes in, if that information is going to show, it's getting a little bit slower, then they can say, oh, okay, we don't need to increase as much. If they continue to increase, bank crisis, you remember that? It hasn't gone away. We're going to talk about that right now and what's happening with these financial institutions. And remember, not just the banks, but the non-banks as well. What does that mean? Let's talk about it. Here we go. You could see this. The stock market panic over the regional banks has subsided for now. Experts say that regulators should remain focused on shoring up the stability of the sector amid economic headwinds that could persist for some years to come. Saying that some of these stocks, they started moving up. The S&P regional banking ETF gained nearly 15% from its March lows, of course. Funding costs for regional banks took a big jump in a couple months ago, and they haven't come down. That is an extremely important thing. You have these interest rates that have risen up, and a lot of these companies were trying to do this. Really, it was a struggle because they wanted to give their investors and depositors a better return than the other guy. Why? Because if they didn't do that, the money would leave and go there. So they were forced to take that risk. So they started to get into these mortgage-backed securities and the toxic debt that was giving a little bit of a return where everything else was actually basically nothing or negative. That's not good, right? So now what we have is these borrowing costs have gone up, interest rates have gone up, and that has really made the value of those other investments that they took on not very good at this point. So that value has to come down. So they took the losses, the depositors started to flee. Everything's happening right now. And so that is the issue. But it's not just the banks that are heavily regulated, or let's say more regulated. It's the non-banks. It's these financial institutions that kind of have, the similar effect. They can, take people's money and they can put it where they need to and in deposits and everything, but they're not really banks. Like it's not you walk in, there's a teller and so on. It's kind of operating under a different element entirely. And so that type of company Those issues are going to be found in the coming weeks, months, and even years, because they're not as regulated. They don't have these regulations, and they're trying to get those through. And let's be honest, it doesn't matter if they do pass something, they'll just roll it back a few years later. You know how the deal works, right? Just lobby your right people and you get that done. Banks increased lending last week and deposits rose for the first time in a month, showing little evidence of an emerging credit crunch in the US banking system. People don't care, people are complacent, and there is no worry. Look at the stock market near all-time record high. Let's be honest. Look at what happened with Nvidia stock going up like something ridiculous. What was it, 25% approximately in a day? One of the biggest companies in the world, their stock went up by 25% in a day. There's no fear. Come on, let's be honest here. And this is just talking about Warren Buffett. So everybody wants to know what Warren Buffett's doing, what Warren Buffett's saying, what he scratches his face. It's a news article. What he basically said was, let's be honest, the debt ceiling shouldn't even be there. It's the kind of thing that, they play around going back and forth, and they know specifically they're not going to let the whole world go into a state of turmoil because of something they are eventually going to pass anyway. I have said this over and over again. This debt ceiling crisis is specifically used each and every time that they masquerade, oh, it's the Republicans. Oh, no, it's the Democrats. It's nonsense. People, come on. They do this to slip in things that could never be passed ever before. They are doing this thing at this time, at the last minute, every single time, because they want to sneak stuff by. And you can only do that when there's an emergency. That's it. End of story. If you want to know something, that's the real deal, right here at the Money GPS. If you appreciate the information, hit that thumbs up button right now. Click it down below. Let's get the next part. It's real key to understand geopolitically the changes, the shifts that are occurring. Number one, China bans Micron's products from key infrastructure over security risk. Tit for tat, back and forth. U.S. Commerce Department strongly opposes the action, saying it has no basis in fact. Just like on the other way around, they said we're going to ban Huawei. We don't want their stuff. We don't want TikTok. We don't want the farmland purchases, one after the other. And China going back in the other direction saying, actually, we don't want your stuff. And I could see both sides of the equation because they are, battling. It is a battle. But this is good news. US and China hold more trade talks despite the strained ties. Meeting takes place just days after Joe Biden predicted a thaw in relationships between the superpowers. So very good news. Talking is good. There is nothing wrong with talking. I'm never going to suggest to anybody ever that, not talking is positive. No, we need to talk. There always needs to be an open dialogue. Even if you never really get anywhere, at least keep it moving. Not talking is not going to benefit anybody at all. So that's basically what this is talking about. And I think that it's a really good, at least we're moving in the right direction. The trade agreement that was from a few years ago, that ended up being nonsense. It wasn't good. But hopefully there could be some developments. Let's actually not have a strained relationship. Let's try to work through the differences. Okay, that might take, it might be forever. Nothing might actually be, or I should say that everything may not be resolved over time, but can a few things be resolved? That would be good. That would be a step in the right direction. China and South Korea agreed to strengthen talks on the chip industry, Chinese Commerce Ministry says. So what's happening here is, we can't utilize, US, Netherlands, Japan. You're all going against us? Well, we're going to be buddy-buddy with South Korea. That's what they want. They want this to happen. China's a big consumer of semiconductors, and South Korea can definitely deliver. I'd be interested to see what happens here, because we can look at it, and I think it's very clear, I've mentioned it 100 times, that China is starting to partner up with all these different countries, and the US is losing out in that way. Trade ministers of 14 countries in the US-led Indo-Pacific Economic Framework talks substantially completed a deal to make supply chains more resilient and secure. Really interesting, okay? A lot of these different countries are basically going towards making improvements in this, in the whole supply chain. You remember how bad it was? I mean, I hope that this is actually the case, but we will see what happens. I think it is clear that over the 2020 period, we learned how bad the supply chain was. It affected food, it affected energy, it affected transportation. Oh my goodness. I can't get toilet paper. I can't get toilet paper. I mean, it's unbelievable. Basic things. Oh yeah, well, we can't get the food because it's being processed at a plant that's shut down. I mean, what? What? The whole plant is shut down? I mean, that stuff didn't happen. So anyway, seeing these developments are positive, and I hope that it translates into something good long term. Saudi Arabia and Russia ties are under strain over oil production cuts. This is an interesting one because recently we saw some developments with Yemen as well as Saudi Arabia and Iran. That whole avenue there was, let's say getting lighter, getting more peaceful, good stuff. But now they're just suggesting that this is, a little bit of back and forth. We'll see what happens. I think that it is something that we gotta pay attention to over time. Now, this video right here, I want you to check out. The link is gonna be on the screen. And basically what I'm talking about is, in this video, is what you gotta know. Each and every country has a specialty, and knowing that specialty, when an event occurs, if you have that in your mind, you could snap your fingers and you could just think of that thought and you would know where the place to put your money or to take it away. Wouldn't that be real valuable? Hit this link right now and I'll see you right there.